that we do have quite a fair thing to discuss about JP, Jerome Powell, and how the US trajectory can go for the second half of this year. Right. And the last thing is, let's, the third thing is, let's have a look at the charts. Euro dollar, pound dollar, EU and USD JPY, dollar pound, etc. So 3 things, having a look at the economic calendar. Well, what about on data releases ahead? What are we going to have? Second is having a look at what Jerome Powell say on the Jackson Hole Symposium last Friday, and then having a look at the charts. Right, so let me share my screen with everyone. Share screen. All right, here we are. Okay. Hopefully everyone can see my screen. So as you all know, FinLogix is the best economic calendar out there that you can possibly get. It's on the go. It's easy to use. Very, very, very friendly interface. All right. On the front end here on this page, it's very easy to use. You can pick. You can do whatever you prefer. Let me just accept those people here. Perfecto. So you can do whatever, you can style this in the way you want. You can choose from last year to this year. You can choose from last week to today. You can do the way you want. And this is what I love about FinLogix. It is a sister company from ACY Securities on top of, on globe of the ACY group. So what I like to do here is I do select all, and then just to not waste time, okay, I click on the star and take the low volatility off, because it's very rare that we're going to have a low volatility impact data coming out, and this will be a how can I say that, maybe like a very important release. Okay, so I rather prefer to only look at the medium and the high volatility, but it's up to you. If you want to look at the low volatility, go for that, go for it. All right, so just simple example here, you can click on that, or you can take off the medium, you can take off the high, just looking at the low, that's all right. Just looking at the medium, leave it there, or just looking at the median high as we're doing today, leave it there, click anywhere else, and you're done. Right. Now, for the countries, I like to select all, first of all. But some of them I don't really care about. Italy, France, I don't really care about them in an instance, all right? Not that I don't care about them, but it's very hard and rarely for us to get a high volatility from those sort of events on the euro side, okay? Right, so this week, click on the this week. Oh, and what I've mentioned about start date to end date is just here. So you can go all the way back to 2013, whatever you prefer, clicking there, and then you're gonna get it. All right, right. So for this week, I do expect a bit of volatility. I wasn't expecting volatility last week, and we can actually see here on euro dollar that in an instance we did have volatility, but we only had volatility in the last, let me refresh this, in the last day of the month, okay? So if we look to the euro dollar here, this was the volatility we got on that week, okay? So from here to here, but in other instances, it would be only this big move pretty much. Okay, so coming back to the economic calendar, that's the first thing we want to talk about. We will most heavily be on Euro and US. All right, Europe and US will be the most heavily volatile currencies for this week, I would say. Right. So for Monday, forgot something here. So you can change the time as well. So for Monday today, we only have, sorry, Ifo Business Climate. All right. Later on at 10:30 p.m., we're going to have durable good orders month over month. So it's going to be really interesting. Sorry, we had yesterday. We had yesterday. And then today, we had already United States Manufacturing Index came in better than expected, but still negative. German GDP just came out 1 hour ago at 4 p.m. Growth rate year over year and quarter over quarter. Indeed, I've made a video on that. I don't know if you guys have looked at it, but it's on the YouTube channel of ACY Securities, so you can go and have a look in there. But if you look at the growth rate, the gross domestic product year over year FINO, they got better than expected. From negative territory, they came into break even, so 0%. Still had production because they had to produce something from negative 0.1% to 0. So still a fair bit of production there. Then quarter over quarter finance came in as expected, and then the consumer confidence came in much worse than what was expected. All right, so it came in at negative 22 from the consensus of negative 18. So yeah, that's not good at all. They were looking to have a better instance from negative 18.6 to negative 18, so 0.6% better than in the previous, but still it was much worse than the consensus and then the previous. All right. Still tonight we're gonna have home prices, so not much happening here. Later on Wednesday, we're gonna have CPI for Australia, expected to have a cool down from 3.8% previously to 3.4% now. So really interesting how things are going, because as an Australian, I can tell you, my friend, that this is a lie. So Steve Oping, can probably tell everyone if I'm lying or not, but the costs of living are increasingly every minute. As we talk here, someone just raised the rent. All right. As we talk in here, the milk price went up. So it is kind of crazy how things are going at this moment. I don't expect this to be true. Not 0.4% drop in July, so that's already too much, my friend. But look, we can probably go from 3.8 to 3.6, maybe, if they're looking to decrease, if they're looking to tell that yes, inflation is decreasing. Then maybe we can look at 3.6, 3.7, but not 3.4. I can guarantee you that. Right. And then later on, tomorrow we're gonna have consumer confidence and unemployment benefit, and of course we can't forget about Fed Waller giving a speech at 3:15 p.m. in Australia. So it's very interesting. What time is on the US right now? Sorry. USA time. So right now it's 3:18 in the morning there. So they're gonna give a speech at midnight. Okay, that's something interesting. Some sort of peculiar time to give a speech. Anyway, so Thursday, we won't have much happening. $8 for takeaway coffee. Oh, mate, tell me. I was just today $6 on a medium coffee. I was like, wait a minute. Hands up, because this is a robbery. All right, this is a robbery. Like, oh, come on, chill down. Anyways, it's probably because of the caramel added syrup, maybe, but that can cost $4, eh? Anyways, so then on Thursday, we're gonna have CPI for Germany. All right, that's gonna be interesting. as I always say, my friends, as I always say, you guys have to understand one thing, one and only thing. There is economies on top of economies, right? So let me grab a pen here so I can draw. So we have an economy, oopsie. So we have an economy here, and then this economy is huge, right? But then this economy is on top of this little one, that it's on top of this little one, that it's on top of this little one, and then top of this little one. So Germany right now is pretty much the second ring, this one, okay? As of Eurozone is this one, okay? So Eurozone takes the whole Europe group, right? Think about a group, take all the Euro group area on its core, as Germany takes probably all of the other rounds. Okay, so the reason I'm explaining these is because these, yes, have a huge impact on the market, especially because Germany is such a big producer, manufacturing wise. They have a lot of manufacturings, and most of the manufacturings are in industrial manufacturing, cars manufacturing, outer vehicles manufacturing, and so on. So Volkswagen, BMW, Audi, Mercedes, technology companies like robotic arms, surgery arms, everything is the top of the line is produced on German. So they always say if it's from German, it's from good quality, right? So it's not a case, like that it's not good. It's very good because they have a lot of technology there. Right, that has been said. It's going to be expected to be at 2.1% from 2.3%. So interesting. Now, later on Thursday at 10:30 p.m., we're gonna have then the big one of the week. That is the GDP for USA, expected to grow 1.4%. Right, 1.4% is expected to grow 1.4%, from 1.4 to 2.8. So there is a growth of pretty much 100% from one quarter to another quarter. But bear in mind that this is an estimated, all right? So estimated, it's not the real value, but still it's really up to it on the market, all right? Just making sure you guys understand that. Now, later on Friday, then we're gonna have consumer confidence from Japan, unemployment rate as well, retail sales, very important, okay? And then retail sales for Europe, for Germany, and GDP for France inflation rate, and of course CPI for Europe, Eurozone, very important, okay, for those who trade euro dollar or euro in general, very important. GDP for Canada, and personal income and personal spending from USA on Friday. And then Saturday we have manufacturing PMI for China, 11:30 a.m. That's a weak time, but it is what it is. Anyways, so that is pretty much the economic calendar for the week. Europe, USA, Australian. So we have Australia CPI, Europe CPI, USA GDP. All right. So there is a lot of volatility in the markets for this week. Do you guys have any questions that relating to the economic calendar, or can we move on and start talking about JP on Jackson Hole? Have any questions? Please send it through. I will open the chat. No questions? All good? Okay, let's move on then. All right. So for those who don't know, we had Jerome Powell Oopsie. On Jackson Hole speech, right? That was 4 days ago. And his speech has only 16 minutes. As I would love to show you guys the full video, unfortunately, it would take so much time, right? Guys, let me just turn on the lights in the office just a second. Gonna be better now because you guys can actually see my face a bit better. Wait, it's loading. Yeah, maybe not. Okay, better now. All right. So as I was saying, someone sent a message. If Australian inflation is higher than expected, we can expect RBA might hike the interest rate in the future. There is a good question, Satish. The actual answer would say depends. It would say depends. So before that's a good question. So I want to spend maybe 3 to 4 minutes on this question so we can finalize everything before we move on. But if we get let's say a higher reading on the inflation than what was expected, most probably at this stage of the race they wouldn't, but because they are already on restrictive scenarios. So taking this way, right? It's 2022 and inflations are growing on huge paces. All right, it's growing like every month is growing 1%. It was expected to be 1 and came up at 2, and then was expected to be 2.2, came up at 3.2, and then it goes like that. So in that area, in that instance, in 2022, yes, that would be effective, the way you've just, wrote it down. Yes, if Australian inflation is higher than expected, we can expect the RBA, the Reserve Bank of Australia, to have a more hawkish tonality on the speech, and that may possibility of a hike. That is one of the key scenarios when it comes to monetary policy. But now that they are already on restrictive scenarios where they know if they increase even more, okay, so if let's say right now is at 5%, it's just a random scenario, okay, is at 5%, and they go and increase to another 25 basis points, so that's going to be 5.25. If that happens, if it comes to be 5.25 basis point, 5.25% rate, the mortgages would be at least 6.25 to 6.7, at least 6.25 to 6.7. Why? So I've explained this a while ago, but what the central bank sets as the rates is what the commercial banks will get. This is called the cash rate. Okay, so the cash rate is what the central bank puts up to the commercial banks like MUFG, JP Morgan, etc. Now, when those banks grab this cash rate, then they transform into the rates, right? So what is the rate? What is the mortgage rate at this moment? It could be from somewhere 60% to all the way to the moon, because it just depends on the client profile. Okay, so if they put another 25 basis points, imagine how crazy the real estate market would be at right now. So there is a lot to take in consideration, not only the inflation. Okay, I don't want to go too deep, but already digging too deep. But just so you know, no, if inflation comes too high, then Australia RBA, the Reserve Bank of Australia, would have to find ways to understand why did that inflation came high, and if it is a persistent sort of inflation, and if it's only from the month of August, or if it's only from the month of whatever month it is, the reading, and why did that happen? So if that inflation was because of a riot that they had in the economy, okay, that's sorted out. We already know that this is not a sticky inflation, it's going to come and go. Now, if it's a sticky inflation and it continues to have the readings multiple times in the quarter or in the recurring of the year, then that's a problem. And they will have to address it as soon as possible. Otherwise, it's going to become a catastrophe. All right. So in general answer, depends. But at this moment of the scenario, in this context of the scenario where we have already higher rates, definitely I wouldn't suggest they doing this. But as they always say, the central bank is an independent organization from the government, and they take their own matters and own decisions from the meetings that they have on a monthly and quarterly basis. Therefore, I'm not expecting them to hike, but any surprises are welcome. So yes, I hope you could understand. Yes, so as they always say, the board are not ruling anything in or out and out. And also mentioning RBA monetary policy statement, I also have the upside risk inflation. That is correct. So you're not wrong. But imagine, Satish, if they say that, yes, we don't know what we're doing, or we will cut, or we will hike. How the market would react to this instance. So yes, they have to say, we're not ruling anything in and we're not ruling anything out. And yes, there is higher risk for inflation, and they are known to be that indecisive tone. All right. So that's pretty much how you should be taking the context of the Australian economy at this moment. Hope I helped. All right, moving on. So, more questions? Santi say that the next FOMC will be on September 18. If USD cut, you mean the Fed? If the Fed cut, the rate and the BOE, the Bank of England, hold the rate on September 19. On the 20th of September, the shark, Japanese yen, hike rate again. Then USD will fall significantly. I agree. I agree with you. I don't disagree. All right. Moving on. I think IBA will not hike because growth is negative. Yes, correct, Satish. That's another way to think as well. All right. So speech by chair, as I was saying, the whole speech is 16 minutes, so it's not too big. But let's have a look on the Federal Reserve. We could watch live. So if you click on watch live, you say continue, and it's going to open on YouTube. And then I can come in videos. Oops, sorry. Come here. I can send this to the chat so you guys can watch if you like to, but we're not going to watch it today. Jerome, sorry, on Jackson Hole Symposium. All right, so I've just sent on the chat. If you want to have a look later on, once we finish, have a look at it. It's really, oh no, I've closed it. It's really nice, but we're only going to have a look at here. All right. So what's most important, all right, from the whole thing that he said? There are a few dot points that is worth mentioning, but when we have such a big impact on the market, it's always good to put in a broad context and try to immaculate in different aspects for different economies. Okay. So when we come to the Federal Reserve website, we can see that the inflation is now much closer to the objective that they set, with prices having raised 2.5% over the past 12 months. And then they say after pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. And then we pause there, because what JP has always been saying is that once the confidence of the board has been moving towards, yes, the inflation is moving on a sustainable path to 2%, that would be the time to cut. And what we've just had it here was that the confidence has grown that inflation is on a sustainable path back to 2%. So yes, with that, we can take already as a September 18 will be a cut. September 18 will be a cut has been projected by the market since beginning of this year, but the whole market was expecting 75 basis point cut from the whole year, and only on the last pretty much Q3, last month of Q3, beginning of Q4, we're going to have a cut. All right. Now, one more very important phrase is that the unemployment rate began to rise over a year ago and is now 4.3%. Still low by historic standard, but almost a full percentage point above levels in early 2023. So I agree with him. Of course, numbers are not lying. It is not the highest ever unemployment rate. But I mean, come on. It's 4.3%. It's a lot, you know. It's pretty much a full percentage point, as he say, since 2023. So in pretty much 1 year, you've let the unemployment raise by 1%, a full point. I know that like back in the days, unemployment was much higher, but like we do have a much better disinvolved economy at this scenario. So it shouldn't be taken like that, right? It should be addressing a bit more, not in a broad aspect, but on a better, in a better way. All right. This is what I think, because yes, this is too generic. It is 4.3%, but I don't care. That's pretty much what he's saying. Okay. And then he says that most of the increase has come over the past 6 months, and so far rising unemployment has not been the result of elevated layoffs, as it typically there's as is typically the cause in an economic downturn. Someone sent a question. Let's have a look on that. September 18 FOMC meeting from Fed is interesting, and also summary of projections release. Yes, correct. I will do that for you, not a problem. So just finalizing here. I think there was only one more thing that was kind of interesting. No, I don't care about the rise and fall of inflation. Where is the rates conclusion? Oopsie, sorry. Can't find now. Oh, there you go. The sum of 2022 provide to be peak of inflation. All right, so they say that the sum of 2022 was the peak of the whole inflation, and that 4.5 percentage point decline in inflation from its peak 2 years ago has occurred in a context of low unemployment, a welcome and historically unusual result. So he's actually, I don't want to say that, but he's actually happy that the unemployment rate is growing, because then people don't have money to spend. And if people don't have money to spend, they can actually control the inflation in a sense of products being expensive because of higher manufacturing costs and services costs. Therefore, people unemployed can't pay for that. So that it's here, you just say that, right? So that in 2022 proved to be the peak of the inflation, and that a 4.5 percentage point decline in inflation from the peak of 2022 has occurred in a context of low unemployment, a welcome and historically unusual result. Anyways, so moving ahead, do you guys have any questions? I think that was the only interesting points I've separated to show everyone. But in general, I would highly, highly recommend everyone to watch the full 60 minutes. It just takes 6 minutes. If you put in a 1.5, 1.75 speed, it goes pretty quick, you know, washing the dishes or drinking or, you know, going for a walk. Put your headphones and listen to it. It's really cool, and it's much better for you to listen to Jerome Powell saying what he has to say than what listening to reading what he said, because you can see the intonation and what he's making more emphasis on something that it's better for etc. etc. All right, so watch it live. You're gonna have a very good context of the economy, of USA economy. Any questions regarding that? Look, my coffee's halfway there, but we're already finishing. So I'm going to give a big sip on this one. So good. I think I'm addicted to coffee. So there's everyone in the world. No questions? Nothing? Okay, moving ahead. Right, so to finalize today, we'll be looking at some pairs, right? At some of the most traded currencies. So if you have any question, if you have any currency that you want me to have a look, please send it through. This is your moment. Momento, as we say in Portuguese, it means moment. All right. So Switz knows a lot of Portuguese, don't you, Switz? I think Switz is here. Switz has been learning Portuguese. I think it's him. Let's see. USDCHF. Yes, sure. Can you explain how market will react? Oh, yeah. Oh, my God. I forgot that. Sorry. Yes. Can you explain how market will react during September 18 FMC, like rate cuts is done deal, but in some projections is only 2 rate cuts in this. All right, Satish, you have really good questions today, man. I like your questions. I like your questions. Let's go for CME. All right, let's go. First of all, whoa, 71%. That wasn't like that yesterday. Anyways, so guys, yes, as you know, we were discussing FOMC's right across the corner. September 18 is the day. All right, is the day that the US dollar will change forever. So I do expect a cut of 25 basis points. I was expecting 50. All right, I was expecting a 50. A cheeky 50 would be awesome, but I'm not expecting a 50 anymore. I'm expecting 25, and I'm pressifying one more cut in the quarter 4. When? Don't know yet. I would have to look at my models, but if we look at 18 of September, expecting 25 basis point cut, 71.5% of the market expecting 25 basis point cut. In the 7th of November, we're expecting 52.7% is expecting no cuts at all. Oh, they're expecting 25 basis points cut, sorry, 25 basis point cut. And then in 18th of December, another 45.3% of the market is expecting another 25 basis point cut. So in general, maybe those people in January that were expecting 75 basis point cut from the Fed, they may be right in the end of the year. 18th of September, 25 basis points cut. 7th of November, 25 basis points cut. So 50 already. And 18th of December, 25 basis points cut, 75. 25, 50, 75. So I'm not expecting 75 basis point cut because there's such a big time yet to come until December. I mean, yes, we are ready finishing it, but still have a lot to happen. We still have like four or five, if I'm not wrong, NFP. We still have 4 or 5 CPI releases, unemployment, and etc. etc. So a lot of things to happen. But my expectations for at least 18th of September, yes, is a cut, a 25 basis point cut. And the way this will react is negatively on the US dollar. I do expect it to react negatively as it is a cut. I know the market is, it would be very positive if they don't cut anything. That would be crazily strong for the US dollar. But as we had Jerome Powell on giving his speech on the Jackson Hole Symposium, then yes, the market would take it as a very dovish and will be very bearish for Jerome Powell pretty much on last Friday he opened the doors for the market to know that a 25 basis point cut is coming. Okay. So if CPI comes lower than expected for Australian dollar, would that drag it down? Yes, it would. All right, no questions anymore. Okay. Let me take it out from here. Let's have a look at some charts. I have some people looking to USDCHF, Euro dollar, and New Zealand dollar and gold. Okay, so first let's start it with Euro dollar. I'm expecting a pullback on Euro dollar. I was expecting a pullback already more in deep, but it didn't happen. So it didn't broke this low here, but what I'm expecting is a pullback. Let me show you where. Let me zoom this out. So I'm expecting a pullback at this area. All right, at this price here. Let me take this off. At the price of 110,800. 110,800 is what I'm expecting to be coming. All right, Euro dollar. Like this. Okay. That's Euro dollar. Then New Zealand dollar. Someone asked about New Zealand dollar as well. New Zealand dollar, I was long. I don't have any other trades backed it up, but I had a position. I've mentioned about a long position on New Zealand dollar until this level here, 62,300, around these levels. It got hit it, but if it looks for a pullback, then I would be looking. Let me show you. I would be looking at come down at this area of this box at 61,600, I would say. Okay. USDCHF. USDCHF is a tricky one at this moment. I would rather not trade in a personal, but if we look at the chart, if we look at, if you want actually trade USDCHF, maybe a pullback is welcoming into this area, and then a continuation of a drop, and then gold. Gold has always been very strong. I'm expecting a pullback actually on gold at somewhere at these levels here. All right, but it's a tricky one. Okay, very tricky one. why is not? Oh, yeah, there we go. So it's a very tricky scenario to expect a pullback from gold until 2,500, sorry, 2,460, around that. But it hasn't come yet. I was like expecting something this huge on this move, but it broke all-time highs again. And since then it hasn't retraced yet. So that's going to be very interesting to see. Aussie dollar, it will all depend on, yes, tomorrow CPI. So if tomorrow CPI comes in lower, then I would be looking to short. If it comes higher, I would be looking to long. Okay, I will be looking to trade data dependent as well. There's no much targets to the downside here. And yeah, I think that's pretty much it, guys. I have to show everyone. So I hopefully I could clear some of the questions. Hopefully I could tell everyone about this week. Yes, it's going to be a volatile week. So we had a look at the economic calendar. I've talked about the Jerome Powell on Jackson Hole Symposium, talked about the FOMC rate cuts on September, and I've talked about some charts. So guys, again, thank you so much for coming. Hopefully everyone have a beautiful week ahead. Thursday, 5 to 6 p.m. same time, right? Same time as today. We're gonna be here live again. All right, everyone, thank you so much. Have a great week, and I see you on Thursday. See you guys. Bye-bye.